Yo, what up everyone? In this video, I've recorded my screen on a trade breakout on Coinbase, showing the level 2, the time and sales, and the full context of the setup that I was watching. It's going to be very insightful if you want to learn how to read the tape. I do have another tape reading video on my channel, which is very educational, and I do plan on adding a full tape reading section to the course very soon if that's something you guys want. So this is going to be a very good breakout, very simple analysis. I go into detail of exactly what I was looking for. If you are new here and you want a very good trading resource, I recommend following me on Instagram at Ameritrade. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're definitely missing out if you're not following it. But now let's get right into this example. I'm going to first break down the context of the setup, and then we're going to get into this live video of the breakout itself. To understand this level 2 breakout, we have to go over why I was watching the level and where it came from. So to get context, let's go over the pre-market plan. I post these every single day in my Discord. We were watching coin. This was on watch from the webinar yesterday. The setup looked very good, and it happened to be that Bitcoin and Ethereum were also rallying, so this adds to the buying context, which made this setup a little more attractive. It's all about putting the larger time frame pieces together, putting the puzzle together, and forming up a picture that you could come up with a solid trading plan. We wanted to break above the 349 level. We were opening above it, so we wanted it to act as support. Once we get above it, there's nothing stopping a buying rally to target the 381 supply zone. We also had demand lower. So looking at this chart, we saw a very nice, seemed to be accumulation forming. We also had middle of October, a nice strong rally, buyers being factored in. This is a recent IPO in April. We had resistance at the 349.20 area, and once above that resistance, we kind of had this white space for about 30 or so points to target that 381 supply zone that formed on the day of the IPO. Now, to get more context and add more pieces to the puzzle, we had that rally, we had some nice volume, and last week we had a move into this demand zone that formed and buyers bounced price at. So if I go to a 5-minute chart, we came into demand, bounced, right? Now we have buyers factored in. We had the context of Bitcoin and Ethereum rallying, and we had this 349, 350 area of resistance. So what I will say is whole psychological numbers are going to be key resistance areas. When we match it up with an already existing key level, we have a very strong area of interest. How you use level 2 and time and sales is to see the interest, see participation from buyers or sellers at that specific breakout level or breakdown level. It'll give you a good clue about the auction, who's aggressive, who's passive, and who's winning the battle, along with actual volume coming into the market. So I marked this from 349.20 to a 350 high. If you are watching price develop, you would have seen every single time we come into the 350 area, it's like we couldn't get above it, and it was like a seller was sitting there. Now I have this live example of it. You're going to see it in a couple of seconds here, but I want to also explain that this first 45 minutes of the market open set up for a balanced period, that if we did get a rally above 350, this would have gave us a further rally, because this would have created a demand imbalance as long as buyers showed interest to break us above 350 with volume increasing. So now into the live recording of this, a couple of things to note here. Briefly, I want to get into level 2. Everything on the ask side is a passive seller, and everything on the bid side is a passive buyer. For the market to complete a transaction, we need an aggressive buyer to hit the ask to remove liquidity from a passive seller. And for the market to move down, we need an aggressive seller to hit the bid to remove liquidity from those passive buyers sitting on the bid. Completed transactions will come through on the time and sales. And what that represents is the price the transaction was traded at and the size of the shares. For example, if we have 4 on the time and sales, 4 shares were traded at 349, 58 and a half. Every single transaction will have a passive and aggressive participant. Every single transaction will have a buyer or seller. So there's never a case in the market where there's more buyers than sellers or more sellers than buyers. There's always a different side participant to every completed transaction. Now, on this example on coin, like I mentioned, that 350 area, that was acting as tough resistance. Every time the market came up to test it, we could not break above that. Now, if you are trading a key level breakout and you want to long the market to the upside, you are bullish, you ideally want to see heavy size on the ask, because what that's going to indicate, it's almost like a brick wall or a ceiling. The market moves up to 350 and you're going to see very heavy passive sellers on the offer. They are willing to sell at that price, and that's going to act as resistance. Now, in this case, or not in this case, if we are breaking out above 350, you want to see those sellers get weak, and you want to see 350 prints coming through on the time and sales, indicating that buyers were more aggressive than those passive sellers who were sitting on the ask. If you're following along still, good. Now, in this case, this breakout on coin above 350, if you are watching this recording, we didn't see any heavy size on 350. So what this tells me is, if you are watching price, I could go back in this recording, we test 350. Look at this, one time here, another time there, so many different times, right? So what this tells me, because I couldn't spot any heavy size on the offer, what this tells me is we had a passive hidden seller sitting on the offer. Now, two things this could mean. This could mean it's an actual seller that if we do produce enough aggressive buy orders to wipe away his full supply on the offer, the market should move up and volume should increase, as you would like to see on a clean breakout above a key level, and that would be valid for you to get long playing a breakout above a key level. You just want to make sure he shows size. Now, if he doesn't show size, that's indicating he's a hidden seller. Now, the context I grab away from this setup, I've seen it plenty of times. I've taken plenty of setups with the same amount of information, is no true size was coming up on the level 2 on the offer side. So there really didn't show like there was a passive seller sitting at 350, yet every time we came into it, it acted like there was, although there wasn't a number sitting on the offer. So what this tells me was a spoof order. It was a hidden seller sitting on the level 2. Every time we came into it, he was spoofing the market that it couldn't break. A lot of traders had the mentality that since it couldn't break, the market was going to pull back. And that hidden seller was on the bid side, buying up all those sellers who were freaking out, thinking the market's going to come down, maybe long stopping out. And he was building liquidity. He spoofed the market, acting like he was a seller, yet he was technically a buyer on the bid side, buying up all those sellers who were selling into the market. So if you're going to see here, with this context, you have to develop a deep relationship with price and volume in real time. It's a skill that comes with screen time and experience, seeing different markets, seeing different conditions. You have to develop a deep relationship with price and volume. It is a very serious edge. So with the context I explained earlier, with exactly what I'm watching for on the level 2, now what I'm looking for is a clean breakout above 350. If he was an actual seller, I want buyers to show effort to bring us higher, put that seller underwater. Or if he was a legit buyer acting like a seller, I would still want to see heavy volume coming through above 350. Prints coming through on the time and sales. I use the time and sales to not only match up the prints with heavy size on the level 2, but also to gauge the speed of the tape. If the tape is very fast, that's going to indicate interest, that's going to indicate participation, and that's going to give us reliability that the breakout probably, most likely, is going to work out. Now, I will also make a point that if we do break out and the market breaks above a key level, in this case 350, and we can't stay above it, we fail to stay above it, that's a good indication of a red flag. Maybe get out of the market. You always want to see continuation. You always want to see the time and sales increase. You want to see bids step into the market, and you want to see the offer to be very, very thin. So going into this example, you're actually going to hear my broker. I'm on Interactive Brokers. You're going to hear him say order filled. Canceled an order right there. And I think I got filled.
Order filled.
Right here. So now I'm in long. Anticipating a 350 breakout. Again, if this thing started selling off, I probably would have stopped out above 348 was my stop loss, 347.50. So I was risking about 2 points. $1.50 or so. And I want to see right now just a clean breakout, volume coming in, heavy time and sales, offer getting lifted, bids stepping in, and price continuously moving higher, indicating effort from buyers. If buyers show effort, buyers are going to get rewarded. So now I'm in this trade. Let's fast forward a little bit. Watch what happens. This is the games that get played on the level 2. I will tell you what happens. Actually, I'll show you the chart. Go to a 1 minute. What's going to happen here is as soon as this thing breaks above 350, it's almost like we skipped a full dollar. So watch this. I think we break out in the next maybe like 20 seconds or so. Play. Right here. Watch what's going to happen. No 350s are coming through on the time and sales. 350 is very weak. There's no heavy size there. Usually you're going to see, 1,000, 2,000, 3,000, 500, 600. There's nothing. You times this number by 100, that is nothing. Yet price is having a hard time getting above 350. And then boom. Watch what happens. All of a sudden, 350s come in. Boom. A quick dollar shot right up. So a couple things to get out of this here. You could chase it up here. I don't recommend it because spreads are going to be wide. And also, number 2, your risk to reward is very skewed. I like playing a little bit before the breakout, front running it, because now if I enter up here and my stop is all the way down here, risk to reward wise, it really doesn't make too much sense, right? Still will work out, still can make money off of it, but from a risk to reward perspective, it really doesn't, work out. So now what this tells me is that that hidden seller, maybe it was an algorithm, maybe it was a big institutional, sell block. We don't know. We don't have this information. More sophisticated tools will. But what this tells me is this algo stopped selling or stopped adding orders on the offer. They just stopped building or adding liquidity into the market, and they lifted up their offer. They lifted up their sell position. Maybe they got filled their full million shares they were leveraging in prior to this breakout. Now, I also will say this rally also created demand in this area right here, which also supports this thesis. So now we're in a breakout. This goes for any market, any stock. As we break out, you want to see volume continue to increase. You want to see the time and sales speed up very fast. You want to see bids step in heavy size, and you want the offers to be very, very thin if you are trading a breakout to the upside. And I will also say, if you are above that breakout level, you want that to act as support if we come back to test it. You don't want to see the buyers that bought, let's just say 350, 349. You don't want them to go underwater. When longs stop out, longs have to sell. If selling pressure is built into the market with longs stopping out, that's going to bring the market even further down. So you want those buyers, you want those bulls to defend that. We come back down to test 350 right here, right? Now, this is where a lot of traders mess up. They let their emotions get the best of them. It happens to me sometimes as well. If you don't have a trading plan predetermined prior to your entry, you are going to stop out of a trade like this. Let's just say you got long. Let's just even say you got long at the highs, right? Your risk to reward is skewed. If you don't have a plan, like I did, my stop loss below 348, you most likely are going to see red like that. You're going to freak out and you're going to stop out. You're trading your profit and loss, which is a bad thing. You're freaking out on a pullback and you're not following your plan, or you don't have a plan to begin with. We still hold 350. We're not getting below it. We're not bidding below it. We're not showing any selling pressure below that level. We're actually acting as support. Come back down to test it. And if you're developing this deep relationship with price, at one point where a red candle showing that move to the downside, then boom, some nice green prints coming through, some decently heavy size coming through, an immediate effort from buyers to try to bring us higher. Keep fast forwarding it, keep moving up. And again, put yourself in the perspective of other longs. Put yourself right now in the perspective of me. If I'm long right here and the market's up $3 so far, this is a risk-free type of trade. Meaning we're up decent amount from my entry. My full target, which was unrealistic, which is why I deviated away from this, would have been this 381 supply zone. But for us to rally 30 points today, 10% on the stock. Can happen. I'm not going to argue that. But it's not very likely. And I like playing odds when they are in my favor. So at this point, since we're above resistance, we don't have any supply above, I was in intraday commentary tab. This is where I update my thought process as the market's developing. I said I'm going to use whole and half numbers as areas I plan on scaling out. There's no resistance. There's no supply. So need to play defensive on this. Next supply is 381. It's a little far in my opinion. Bitcoin's rallying, supporting coin. Scaling some more if we fail to get above 355 was my area. So 355 was where I wanted to scale out. I actually posted my fills in the Discord for the members that want to go back and see it. Let me pull up this recording. So now as you're in the trade, right? Now we're playing a level 2. We want to see the tape is going to slow down. It can't keep increasing forever and ever, right? But since we are up about 3 points from that entry, pullback should get defended and just follow the trend. A lot of traders can't follow the trend. They freak out on a pullback. They get scared. As long as the market's making higher highs, making higher lows, and we're in an uptrend, just keep riding that trend. Maybe taking profits off when you have them, especially when we don't have a lot to reference off of. And at 1040, I scaled out half of my position. Right at this candle right here, 355 acted as resistance. The market seemed like it was a little bit stalling out. And we're up 4 points from my entry. I just want to play it safe, take some profits, and I did at 353.35. Now again, it's all about riding the trend. You can't let a little red candle like this freak you out. Volume is still high. Look at all the volume labels up here. Still doing above the average, above all our average dollar amounts, above all the average volume amounts. And this is a strong breakout, what you want to see. Buyers keep proving themselves. And at 10:59, when the market looked like this right here, I got out my full position. So this is a mistake. I learned from it. Instead of selling full position, or instead of scaling out another 25%, I fat fingered it. I had on my depth of market my full position loaded up instead of my quarter position that I wanted to scale out. So I got out my full position accidentally here. It sucks. I fat fingered it. It's a mistake. It happens. And we just kept continuing to rally. Still making higher highs, right? Higher highs, higher lows. No reason to freak out. Volume still high. Come up to 360. And, you know, unfortunately, I missed another $10 rally from where I exited. But point I'm trying to make here is higher highs, higher lows. Very clean breakout above that level. Not a lot of size on the offer when we broke out above that level. Bids kept defending it on pullbacks. That's what you want to see. The level 2, or the time in sales, was very fast. Heavy prints coming for 350. Couldn't get above it. And when we got above it, we had that continuation. We didn't have any red flags. And, you know, clean move off of that. And then pretty much in the afternoon session, it was dead. The setups happen when there's volume. When it dies out, you consolidate. That's when it's going to play with your emotions. But as you can tell, you know, 8.4 million shares traded today compared to a daily average of 5.6 million. So let me know. I can start making more videos like this. I only really use these for key level breakouts. Like I said, I plan on maybe adding videos to the course about full level 2, in depth of the ask, the bid, different types of strategies, different things that I look out for. If you guys want that, just let me know. I could, you know, plan on adding videos and making them. So I think I'm going to end this video on that note. Drop a like if you enjoyed it. I would appreciate it. Comment if you have any questions. The more simplistic your analysis is, the better off your trading is. The market is not very hard, but us as traders make it hard on ourselves. So let go of your emotions, less thinking, more doing. If you want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. But besides that, I'm ending it. Peace out.